Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for January 7th, 2016. Welcome. I want to make a couple of very important observations and a few thoughts on emotional game theory or behavioral finance, as I like to call it, and shed a couple of points which I think are very, very important to all of us, including myself. Let me start off by saying that this is probably one of the most difficult and volatile markets. I would say one of the most volatile markets that I've ever traded in. And the reason is simple. We have the advent of supercomputers that move algorithmic high frequency trading programs that are moving in nanoseconds and skewing things right or wrong at speeds and in a manner which are unquantifiable, known as extreme volatility. Now, what does extreme volatility actually do? Well, first of all, it messes with people's minds because extreme volatility doesn't follow fundamentals, in many cases doesn't follow technicals, and simply moves in a structured pattern to do what it needs to do. Keep in mind that the algo high frequency trading programs, and by the way, behind you, you're looking at a chart of the S&P 500 in the form of the E-minis going back to September, October of 2011, 4 years ago, right there when it was around 1,068. Anyway, let me get straight to the point here because this is important. So the bottom line is that algos and high frequency trading programs don't make up their mind to do certain things just because they have a rational reason to do it. They do it because they see a flow of things. In this particular case, we're going through a corrective downturn, which is in a basing pattern that I've stuck by, and I'm seeing quite a few things which are showing me that on a short-term basis, we have a possible tradable bottom that is forming in place. And I've said that very clearly through my charts. So anyway, so the algorithmic high frequency trading programs go ahead and exacerbate those movements, both on the upside and downside, in ways that a human trader who thinks in the old-fashioned way can never fathom. So what happens? Traders go mental. Let me just make a couple of things very clear about my service. I try to do my utmost to what I think in my best ability, mental capability, and my experience that I've had, to do what I think is right. Now, if the markets do what they do on a certain times, for example today, and just consistently befuddle us both on the long and short side, and keep in mind that I posted a good number of short trades as hedges which worked out tremendously well, didn't help me in my P&L for today to go in the black. I was still nicely in the red by the end of the day, which is not, in my opinion, given what we're seeing in the background. We don't know what's going to happen tomorrow morning, but I think I'm going to reap the fruits of my labor on all the cheap things that I bought. And I don't go hog wild. I buy moderate amounts, which give me outsized returns on a big volatile surge higher to levels that I posted, and I'll show again tonight. That's tactical trading. The long-term stuff, the swing stuff, you got to do what you got to do with it. But here's a point that I want to make. People get emotional and they start to vent. Hey, it's okay. But remember one thing, we're big boys and girls here. We're not here to hold people's hand, to pat them on the back and say, oh, it's okay, you know? It won't work like that. And going forward, it will never work like that. Because the reality is that I thought tonight, as I was enjoying my nice glass of red wine, what can I do to help and what can I do to deflect some of the criticism that comes my way, which is okay. It's only natural. And I thought to myself that many years I subscribed to different services. I still look at a few services, okay? Because my mind is open. There are brilliant people out there, and I, look at some of the stuff that I look at. And most of them, what they do is they send you a set of charts or a newsletter at the end of the day. There is no intraday engagement. There is no real-time education. There is nothing. There, most cases, there are no video casts either. Forget Periscope broadcasts. I'm probably one of the few guys who does it. And I pay a subscription rate which is equal, if not higher, than what all of you pay me on a monthly basis. So I ask myself that with all the content that's delivered, why should I even be held responsible? First of all, it doesn't come into account why I should be held responsible, because I am not responsible for anyone. I'm just simply delivering what I believe to be content that could be effective for other people. And so I thought to myself, why should I even bother myself with what somebody else is thinking or doing, and why should I even placate them? So I've taken it, I'm going to go back to my strict policy that all of you have to understand very clearly. As a business, I am providing content. What you do with it is your business. If volatile markets screw you up, you don't have liquidity on the side to take advantage of tactical position, which we have done consistently, Monday, Tuesday, Wednesday. Powerful trades in many different forms, whether it be the VRX, whether it be the Netflix, whether it be RDP, whether it be other stocks that have gone against the grain and brought things into the green, or tactical reversals bought into and made money on the high momentum trades, the Amazons, the Googles, and that type of stuff. My point is, it's your job. If you can't do it, what do you want me to do? Ask your grandma for some money. I mean, I'm being serious here. So the point is that vent within reason. Otherwise, leave. It's a free world. This is the United States of America. And you know what that means? If you don't like something, go away. I'm serious. Because I'm starting to get to a point where I'm getting a little bit peeved off with a bunch of people, and there's nothing wrong with it. I have nothing personal. I'm a grown man. I have responsibilities. I have a great life. I suffer my losses, and I make a heck of a lot more gains because I don't give up. And I have my certain set of rules that have worked for me for many, many years. I have taught them. I've showed them. I'm going to show them again a bit tonight. And I'm going to stick by it because I'm a man of discipline. I'm not going to keep on changing my attitude just because I think, oh, the market's down for a day, for 2 days. To me, it's so what? Because if I'm seeing technical signals of basing, a basing pattern, I'm seeing McClellan oscillators way oversold, I know there is going to be a reversal bounce. Whether it comes tomorrow or Monday or Tuesday, I don't know. But it's going to happen. And it's happened so many times before, even since my service started on April 15, 2014. So here is my suggestion to all of you, ladies and gentlemen, and some of you specifically, which I'm not going to name right now, is manage your own trades. Take my work, content, and do whatever you want to do with it. There are profits, take it. Don't wait for every single timing exit or entry. I mean, exit. Entries are always put there with stops and all that stuff. And then you do whatever you want with it. Because the reality is that in a volatile market, I shouldn't even be in the chat room. Because in a highly volatile market, it doesn't matter how powerful a trade chart pattern looks. The next minute, it changes. So the fact is, I see patterns. And if I was all like most of you, then I wouldn't be here where I am. And I'm not sitting in a pool of misery like a lot of people are. Because I've fought my way up. That's the fundamental difference between me and probably many of you who are trying to get an understanding and the mental capability of attacking a battle zone known as the financial markets, and in nowadays a serious battle zone known as the where we are right now. I mean, these are markets that even the best of the best hedge funds in the world, as you all know, and I've mentioned it before, have dropped out because they couldn't take the heat. So, like I say, if you can't take the heat, get out of the kitchen. So, saying all that, I love you all, okay? People who know me, they know where I'm coming from. People who don't know me, who haven't had the, who have been, I would say, seriously, stingy enough not to sit for the advanced group sessions that I spent hours on, or try to understand the complexity of the charts that I'm putting out there and think that the market is just a cakewalk and I should know everything that happens. I should know that the fat idiot from North Korea is going to, test a nuclear or a hydrogen bomb out there 10 kilometers under the. Yeah, I should know all that stuff because the day before the charts looked perfect on his setup, and then came the H bomb scare. So the fact is, I have no responsibility here, to be honest with you. I have a responsibility to put some very tactical, technical charts and such that I feel are worth looking at. Okay? Aside from that, how you manage your trades, how you do your stuff is your business, not mine. I am not in your trade management business. I am not your broker. I am not your financial advisor. And I'm certainly not your nanny. Saying all that, I believe I offer a significant amount of value added service through the content that I deliver. I am unorthodox. I do not expect you to understand how my brain works. And I'm okay with that because I do think outside the box and I do not. And I'm a true contrarian. And that's me. If you want to have your own behavioral modification on how you need to be a powerful warrior in the markets and how you do your things, then that's up for you to do, not for me. That's all I have to say. And I hope all of you got this message loud and clear. Okay? Aside from that, let's hit the technicals. Let's take a look at that was a weekly chart of the markets going back to, like I said, what was it, 2012? 2011. Let's see what's going on right now. The Chinese market open, they're higher. The fundamental reason behind it is the currency, which has been driving the markets, as you know, and the yuan has been fixed. They fixed the yuan peg rate, and that has been fixed higher. So that's a relief. There's a lot of pent up short positions. There's a lot of pent up buyers sitting there. There has been trillions of dollars lost in the market just over the last, in the last 2 weeks. To be honest with you, we're down 150 points from 2075, 140 points to 1930. So yeah, that's almost 150 points. So that's roughly about what, 800 points, 900 points on the Dow. So if you don't think that there's going to be reversal bounce, what can I say? So this is what I'm seeing, and I'm going to repeat this again. Here is your S&P 500, the E-mini futures, and on a reversal basis, I expect the most we can get to is around 1975. On the S&P, I believe that comes to about 1980 or so. I've been saying it. This pattern here that you're looking at, I believe gets filled. And once that gets filled, let's see what happens. Either it breaks out or we break down again. At this point in time, the most dangerous thing for anybody who's long, including myself, is that we break the 1920 low, and at that point we get to that 1850 that was the capitulative low back in August 24th when we had the flash crash. I'll go back and show that to you. Now, is this a possible double bottom? Yes, it is. I repeat again, this is a game of probabilities, not a game of certainties. Let me continue on the next video cast because this one's almost ending. So with this one, I'm going to leave it here. Possible double pattern, bottom, sorry, and pattern symmetry ends around here. And I believe that gets done by the first part of next week or as we get into next week. Let me continue this on the next video cast. Thank you for listening.